All right, welcome back. In this video, I'm going to dive a little bit deeper into the functionality of PyAlgoTrade, and I'm going to demonstrate PyAlgoTrade by reproducing the results of this backtest by Steve Burns on this 200-day simple moving average strategy that outperformed the S&P 500 index over the course of 20 years. And so you can see the chart he produced here, and the trades and the drawdown and all of the statistics. And you see the one I've recreated here in Python code and produced on the right. And you can see it checks out, the math checks out. I did the math and looks pretty similar there, although you can see the scale is a little different here, but this curve indeed matches. And so let's talk about how you write this backtest in Python. And so it's getting a little late over here, so I'm probably not going to draw this one out and type it in from scratch like I usually do. But what I'll do is I've already written this down before this, and so what I want to do is walk you through the code. And so in the last video, I created this backtest.py for buy and hold strategy, and so I'm just going to rename this one to backtest buy hold, just have a unique name, and then I'll also create a new file called backtest moving average.py, and this will be our new script. And so I'm adding a couple new requirements for this one. I'm going to add pandas in case you don't have it installed. So I'm going to do pip install pandas. Okay. And so why don't I go ahead and paste the code in and walk you through what's different between the last script we wrote and this one. Okay. So you see in the previous video, we had about 30 lines, and this one's a bit longer, about 120 lines. But a lot of this is all these analyzers that there's not much to understand here. You just call some pre-built functions. Okay. So let's go over the rules of this strategy. So if you remember, this strategy had a rule to buy whenever the closing price at the end of the month closes above the 200-day moving average, and it sells when the closing price at the end of the month is below the 200-day moving average. And so, yeah, that end of month part of it is really important, because let's say the S&P 500 closes below the 200-day moving average on March 15th, right? And you're in the trade, you're not going to sell then. So this strategy assigns special significance to the very end of the month. And so you're not going to get shaken out of the trade if it just dips below the 200-day moving average for 1 or 2 days. It's the closing price at the end of the month. So you only take action at the end of the month. And so I have the code written right here. So I went through and tried to reproduce these results. And here is what I found. And so the first rule that we have to take into account is this end of the month rule. So in the last video, we were looping through bar by bar, and we're making a decision on each bar. But we don't want to make a decision on each bar. We only want to evaluate that bar if it's the last day of the month. And how do we know whether it's the last trading day of the month? Well, this is actually non-trivial, like if you write this function yourself, because the last day of the month, as you know, could be January 31st. It could be February 28th. On a leap year, it could be February 29th. There can be market holidays, maybe New Year's is a holiday, New Year's Eve. I'm not sure. Is that? No, I don't think that's a holiday. But the point is, it can fall on different days. And so even if you check December 31st, maybe that's on a Saturday and the market's closed. And so one thing you can find is that Pandas actually has this, there's actually this Pandas market calendars. So Pandas market calendar. And this is a package I use that takes care of a lot of this math for you. And not that it's really math, but there's a lot to the calendar. If you actually look through this, it actually does gets you quite a bit of information. So if you actually dive into this, you'll see it does a number of calculations, right? So it looks at holidays and things like that. So you see there's a New York Stock Exchange calendar that's created in here that it uses. Okay, and so what I did was import pandas and the pandas market calendar here. And then these 5 lines of code I used in order to find the last day of the month. So I'm getting a calendar, I'm giving it a date range that I'm interested in, so the New York Stock Exchange schedule from 2000, and I went through the end of 2019 here. And then what I want to do is what that'll do is find all of the dates on the schedule. And so I use this pandas data frame group by here to get the last day of each month. So I group by the month and day, and then I get the last day of each month. And then I convert that to a date. And then I use a list comprehension here where I loop through all of the dates and convert them to a list. So now at this point, I have last days of month and have all of those dates stored in a list. And so if I print, let me just run this real quick. And so let me comment all this stuff out so we can build up this program a little bit. Okay, just so you see what this does. Last days of month, I'm going to print those out. Okay, so if I run that, and let me comment out the plotter real quick. All right, so you see I have this list of the last days of the month. So January 31st, 2000, February 29th, 2000, right? That's a leap year. So there's all this extra logic to determine the last trading of the month. So you notice in 2009, it was February 27th. So a good amount of logic is encapsulated in here. So if I were to just show you what this NYSE gives me without doing any processing. So let me do that. And let me print out this data frame. You'll see this gets me all the trading days, but this gives me every single day. And then I can group by and just group by and get the tail. And so that'll be the last day of each month that's present here, right? That gives me a data frame like that. So you see all these last days of the month, and you can see how I eventually get this down to a list that's formulated exactly like I want it to, and I have it stored in last days of the month. So that's a little bit of data cleaning and manipulation you have to do just to get things exactly what you want, how you want it. Okay. The next thing I did is I created a new strategy class. And you'll remember we just extend backtesting strategy just like we did in the last video, but I called this moving average strategy. Okay, so I initialized it as I did before. I set my initial position to none, and then I initialized my instrument. And then here what I did is create a new instance variable called MA, where I store my moving average. And in this case, I used an indicator that's built into PyAlgoTrade. So you see I have ma.sma. So if you look here at the top, I did from PyAlgoTrade.technical import ma. So if I were to drill into the technical package inside of PyAlgoTrade, so let me go to PyAlgoTrade again. And then if you look at the documentation here, just so you know what you're doing, I can go to the table of contents and technical, and you'll see the different technical indicators that are available. And you see there's moving averages is the first one. So I use the SMA, but you can also see there's the MACD. You can see how you can get the MACD histogram, the signal line, RSI, ATR, Bollinger Bands, a lot of things we've already discussed on this channel. Okay, and so these are all built in, and so I just imported the MA, right? And so at the very beginning, when I initialize this, I have the data feed. So just like before, I have this Yahoo data feed. And so what I want to do is get all the data from the year 2000. And actually what I want is, I'm going to get it from a little bit before to make sure I can calculate the 200-day moving average as soon as possible. So I'm going to get from 1999, so let's say May 1st, 1999, right? Okay, so I run this and I get my data. Okay, so I have SPY and I have all my data from May 3rd, 1999 and beyond. Okay, so I have my data feed. I instantiate my moving average strategy. I give it a data feed and SPY. Okay, and then in my strategy, I calculate a moving average on my feed, so the SPY instrument of the feed. I run the 200-day moving average, so I give it a parameter of 200, and I'm running it on the adjusted close, which is very important. And then I'm going to use the adjusted close values just like I did in the previous video. So that's my initialization. And then in my on bars function, I can just check bar by bar, right? And then self.ma, you notice I'm checking the negative first. So I'm checking the very, in advance, I calculate the moving average of all the bars. And you remember in Python, in a list, we can just get the last value by doing the negative first index, right? And the negative second index to get the previous one before that. So I'm looking at the very end, seeing if I have a moving average yet. If I don't, then I don't even need to worry about this bar. So I want to accumulate 200 bars before I can calculate the 200-day moving average. Otherwise, I just return. There's nothing more to do. But once I do have a 200-day moving average, it continues on. I get the current bar, I get the current bars adjusted close, and I also get the date. And I'm going to get it in the ISO format, which is the month and day. And so I pre-calculated this list of the last days of the month. And since I only care about the last days of the month, I check if the current date of the bar is in the last days of the month list, right? And if it is, then I'm interested in possibly executing the trade. Otherwise, I'm doing nothing, just going to the next bar, right? So I'm only taking action on the last day of the month. If I'm not in the position, so if self.position is none, as before, I'm getting my broker and I'm getting the amount of cash in it, okay? And notice this 0.98 here. Let me take that out and show you what happens. If I run this without the 0.98, and let me print the actual fills here. Let me show you what happens. And, oh, nothing happened. Okay, so I have it commented out still. So I'm going to uncomment this strategy.run here so that it actually runs the strategy this time. So I'm going to run that. And so you see I have all this information about the orders now, but you see it says not enough cash to fill SPY order for 9,032 shares, for instance. So you see I keep running out of cash. So I'm trying to go all in like I did in the previous video with all of my cash, right? So I'm calculating a quantity using the cash divided by the close of the day. But if you remember in the last video, we discussed how you're not getting exactly the close of that day, right? So on this bar, I'm not getting this closing value because we're waiting until the close happens, right? So really the execution is not actually happening until, you know, the very next morning. And so we're not getting the closing price exactly. And that's why we log these on enter OK and on exit OK, because I want to check the actual order that got executed and the execution info and log it, okay? And what you'll notice when you do that is this order doesn't actually get filled. We don't have enough cash. So what I need to do is try to just use almost all of my cash. I'm going to leave a little bit of buffer, right? And so that's why I multiplied times 0.98 here, because the next morning, you know, maybe it gaps up a little bit. And so I might not have quite enough money to buy all of the shares, the full quantity that I calculated in advance right here. So I'm calculating my quantity here, but by the time it's the next morning and I want to buy, if the price is higher than this quantity, I might not be able to buy that quantity. Okay, so I'm just going to use like 98% of my cash. So that's the number I use. Maybe you want to use half your cash, you know. So adjust that value as needed. So I'm getting 98% of my cash, and I'm going to say if it's the last day of the month, and then the close on the last day of the month is above our last moving average, our 200-day moving average, then I'm going to buy a certain quantity and log it. Okay. And then if it's below that moving average and I'm in the position, then I'm going to sell at that close. So I'm going to exit the market, okay? And I'm going to set my position back to none because I no longer own SPY and I want to be able to re-enter at some point in the future, okay? So if I clear that out and run that again, you will see that on February 29th of 2000, I'm buying in at 92.44, which is above the 200-day moving average that I logged here, which is 91.45, and I enter on February 29th. And if I go back and look at my moving average strategy here, and I want to verify that I'm correctly reproducing what Mr. Burns, excellent, reproduced here, or published here, February 29th, you'll see that he bought on February 29th, looks good. And then my sell executes on September 29th. sell September 29th, enter March 28th, 2002, March 28th, 2002, and so forth. So you see we're closely matching what he actually did here, right? And so those are at my buys and sells occurring at the end of the month. Now you'll note that if I log what happens in on enter OK and on exit OK, if I do self.info there and I put the actual executed price, you'll notice in my backtest there will be a slight difference in that I detected that I should enter on February 29th, but you notice my fill doesn't happen, at least with PyAlgoTrade. It doesn't log my fill until March 1st, since I waited till the close and then I need to buy after that. And so my fill is actually not at 92.44 here. It was actually bought at 92.57. Okay, so there's why there is some difference there. Okay, and so now that I have my strategy, which is fairly simple, what we can do is analyze our strategy. And so to analyze the strategy, we use what are called analyzers, and that's built in to PyAlgoTrade. So if I go back to my table of contents and I look at analyzers, you notice there's these different strategy analyzers. So there's a returns analyzer, a Sharpe ratio, drawdown analyzer, trade analyzer. So it'll show like the profitable count. So the number of profitable shares, the number of shares where I lost money, profits and losses, and so forth. And so all I did was copy down from the documentation here these function calls. So there's a bunch of different functions you can call, and I'll comment them all out right here. So the important thing is you get the feed, you instantiate your strategy, and then you also import these analyzers. So from PyAlgoTrade Strat Analyzer, I imported the returns analyzer, the drawdown analyzer, and the trades analyzer, right? And then so I instantiate those just like in the docs. I attach those analyzers to my strategy. So it's very important you instantiate the strategy first, you attach the analyzers, and then you can print all the values of all these analyzers, right? And so now when I run this, you can see the results of the trade. So it'll show me the number of trades I made. So you see my 10 trades here. So yeah, the way I've written the backtest here, it looks like it gave me a value of over $4 million and over a 300% return, which is quite nice. And the max drawdown was a little over 20%, which is great since we didn't have to withstand the full drawdown of 55% or whatever the final number was that the S&P 500 went down in 2008. And yeah, this analyzer gives us tons of statistics about our profitable versus unprofitable trades, our average returns and profits on each trade, and so forth. So we can do a lot of analysis of this strategy, and then we can even plot it out. And so now as a final step, I'll import the plotter here. And this plotter uses matplotlib. So you want to make sure you have matplotlib installed, and this might install that as a dependency for you, but just in case, I'll put matplotlib here in the requirements. And then here, what we do is after, this is important, the order here is after we instantiate the strategy, we instantiate the strategy plotter, and then we add the 200-day moving average as a subplot. So that's how we get this line here on our chart. So this line here. And then what else do we do? And then we actually need to plot the results after the strategy runs. So that ordering is important as well. And I'm going to put this code up if you want to copy it, play around with it yourself. And so I'm going to go to the tutorial and I'm going to run my backtest moving average right here. And that's going to show my strategy results. And it also gives me this nice plot here. And then you can see all the different trades that are executed. And so you can see on the plot here in green, it shows our entry points. The red, it shows our exit points. So you can see there's a little bit of chop, but not much of a drawdown. This is the .com crash here. S&P 500 didn't have as big of a drawdown as the NASDAQ, but you can see we didn't lose very much money here because it recognizes the downtrend. We caught a huge upswing 2003 through 2007. And then at the end of 2007, on December 31st, 2007, it's the end of the month, close below the 200-day moving average, and we exit. We avoid all of 2008. So we make 0 trades in 2008. re-enter after the bottom, and this is May, the last day of May, so May 29th, I believe, 2009. We re-enter, ride that up, and then we ride this big trend as well. And you can see the portfolio grows nicely, and we don't have the huge 55% drawdown, which is great. And so there is the plot of the strategy. These are the results using the analyzer. We were successfully able to show a strategy that outperformed buying and holding, and we were able to avoid these huge drawdowns just using a single 200-day moving average. I know it's nothing fancy or sophisticated. It doesn't use machine learning or anything, but hey, this worked out pretty well over the course of 20 years. And as a final thing, we can just see what occurred last year, since he only went through 2019 here. What we can do is download the data through the present, which is June 16th. So it's late right now, June 16th, 2021. And so I can download this data again for the present day and then run this. And let's see what we get. And what else I need to do is my schedule here. My days only included 2019, so I need to adjust that. And I'll save that. So I downloaded my new data, and let's see how this behaved. 2020 messed up a lot of these programs, probably, since there was this huge sharp drawdown. So if you had some moving average crossover that relied on the 50-day moving average, for instance, like that golden cross I think we discussed in this channel, then the crash might have happened too fast for you to even exit. So I don't know, let's see what happened here. So if we look here, you'll see what's cool that happened here is this is the beginning of 2000. You'll see at the end of February, it looks like it exited here. And so the S&P 500 didn't have that full drawdown, right? It went from like 3390 to about 3000, I would say. So you did exit. You avoided this full drawdown. You still ended up re-entering the trade about where you exited, but it's nice. You didn't have to deal with I don't know if you were trading that, but I was trying to catch this dip, and I bought it like all the way through here, but it's still pretty anxiety inducing there. So a lot of people like capitulated there. So this is nice. You're still protecting your gains. Got back in. You still witnessed this huge upswing at the end, and look at that. So this is where we ended up. And then now you look at the strategy, and wow, looks like it went from $1 million to like 6 million, right? And so continuing to use this strategy, even after the article was written, you see your final portfolio value, you're almost at 500% returns. And if you used all your money, maybe even more than that. So going from $1 million to 6 million, and not withstanding not holding through the whole COVID crash either. Pretty good returns there. So yeah, that's about it for this series. We learned a bit about how to use PyAlgoTrade, how to backtest a strategy that outperformed buying and holding the S&P 500 over the course of 20 years. Download some data. We ran some of these analyzers. We plotted a chart. We visualized this, saw entry and exit points, covered a lot in a very short amount of time, less than an hour total for this whole series. So I'm pretty happy with this. So thanks a lot for watching the video. Stay tuned. I got a lot more on the way. Thanks a lot.